Hey, good morning or good afternoon. This is Mayor Valensky with Driving Markets. Anything said in this piece is an opinion only. Let's go over the title of Driving Markets, driving while talking about markets. Let's kick off. Two main subjects I want to talk about today. Number one is Meta. Not a big fan of Facebook, really not a big fan of Zuckerberg, don't like the company, but you can't deny they had fantastic results and they moved up 15% yesterday. They beat market expectations, and furthermore, the forecast for the future is very, very bullish. So the shares have gone up, everything's looking rosy, all looks good, top class, well done, Facebook. Now, what they've done in order to achieve those profits is they've made massive cuts in staff, laid off a load of people, and those layoffs will continue. So what they're doing is they're cutting their costs in the bottom line, and by cutting their costs, they're adding to the profits on the bottom line. Mark Zuckerberg came under huge pressure from the hedge fund investment managers last year and the shareholders that he's simply not doing enough. Remember, Meta has got huge leakage into the metaverse. Big gamble. If it comes off, they're going to produce huge amounts of money. In my opinion, it's an empty vessel. But who am I to say? As obviously often I get it wrong, as some viewers say you always get it wrong. Fair enough, I got it wrong on Meta. What can you do? That's the way it goes. But I do think Meta at these levels is not so much a buy as it is a sell, because it's gone up dramatically from December last year. Everything's built in the price now. And therefore, to get any more value of that, they're going to have to cut costs furthermore dramatically and look to increase profits. Remember, their revenue comes from advertising. As we go into recession, and we are in a recession, as we go into an official recession in 2023 and 2024, then advertising revenue becomes tighter because more and more companies will want cheaper costs for advertising, and more companies, or conversely, less and less companies will stop advertising. So it becomes a very tight market space, and that since that is the main revenue producer of Facebook, Meta, that will come under scrutiny as the recession goes in. So in my opinion, it's more like an opportunity to sell into this rally of Meta rather than buy the actual stock. That also applies generally into the stock market, a better bet in selling into this rally than buying this rally, due to a lot of concerns, whether it's the banking crisis, whether it's recession, or whether it's overall the cost of living or rising interest rates, inflation, etc., etc. Moving on to another subject. Also, I have three subjects to discuss. First, Republic Bank. To me, it's pretty evident that the bank's going to go bust, probably be taken over by a competitor. It's not going to be bailed out by the Fed. The Fed's clearly stated yesterday that they're not going to pour money into failing banks. That sent the shares down on Wednesday. Yesterday, the shares did creep up a little bit. Again, probably an opportunity to sell the shares. However, if that bank is going to be taken over, then those shares will fly. So be aware of that. If you're going to go short of the stock on the basis that it's going to go bust, be aware that if there's a merger or the bank is taken over, then you will be caught short, for want of a better expression, and be caught out. So just be careful if you're going to go short, because you might have an opportunity, if it's taken over at this level, to go long. A bet, it's a gamble, but you never know. If it is taken over, then the shares probably will jump dramatically. Just be aware of First Republic. Other point is I want to mention today, focus on I should say, is Japanese interest rates. They kept interest rates as the same. They're not increasing interest rates. That sent the yen down and sent, for example, the dollar yen up, euro yen up, and pound yen up. Okay? Now, the Japanese are probably going to keep interest rates at this level until the end of 2023. It's unlikely they're going to change their zero or low interest rate policy, which means that other currencies become attractive. So dollar yen has jumped up to 136. Those of you who are FX traders, keep an eye on that, because I've always been saying those who missed the opportunity on the last round could get back in and see dollar yen at 140 to 145, even 150, based on Japan keeping their interest rates at a low level. It does not mean that America on the euro dollar, the US is going to increase their interest rates, but that differential between the two is going to cause the dollar yen to be a buy as far as an FX pair is concerned. Euro dollar looked like it had a little bit of pressure yesterday. Pounds looking strong, looking like to break through the 125 level against the dollar. Looking at the diversion or the inversion between the 2-year US Treasury and the 10-year, it's got wider than ever, indicating a deeper recession than ever. So the 2-year Treasury yield is just simply miles ahead of the 10-year Treasury yield, and that is a very serious indicator of a recession. I've said this all along since last year when it first started. The minute it becomes inverted, where the 2-year yield is higher than the 10-year yield, that is a clear sign of recession. What I mentioned last year was a passing phase. If it was to continue, it has continued throughout the 12 months. It is certain we're going into a recession. Official recession, that's what I'm talking about. We're already in recession, I'm talking about official recession. Gold hovering around the 1992 level, could break out above the 2000. There is an opinion that's going to go down to 1950 and then before it goes back up there. My opinion is it's going to try and test the 2000, go above there. The banking crisis is not over. You'll see gold react positively as the banking crisis develops. It is going to develop. It is going to get very serious throughout 2023. All of that is my opinion. It's on the cards. Second tier banks are in trouble. Cryptos, Bitcoin, crept up to the 30,000 level, come back off again. Looks like it wants to test that 30,000 level again. If it breaks up there, all of those Bitcoin traders who are very bullish, looks like they wanted to go all the way back up to 35, 40,000 from there. Could be anyone's guess. This is Meir Walensky with Driving Markets. Driving when I'm talking about markets. Share, subscribe, comment.